I just got some food and I'm ready to go round three. It's getting kind of late, but if you're still out there, you want to know what's going on. Welcome to the Hustle Investor P channel. So it looks like we did get a rejection right here, and then we hit this area right here on the 5 minute, and it looks like we temporarily found support, printed temporary doji, and we're testing again this. So essentially, we want to look at this area and this area, but this area is potentially being resistance. So let's go to the. I guess I'll close out this trade with you guys. So let's go to the 1 minute. Turn on Market Cipher because this is really good. What else do we want on? Maybe RSI possibly. Trying to think what else you would use. I think Market Cipher is really the absolute best for scalping. Alright, so support, resistance. These are the two levels we're looking at. We're looking at this level. If it breaks this level, we're going higher. If we break this level, then we're looking for this level right here. And if we break this level, we're going lower. Oh, I was having a hard time earlier because of the way it was set up. Let's see. I don't know if you guys can see. Let me bring the charts a little bit in this direction. Alright, hopefully you can see, because I know my head was over here. So, again, idea is this is support right here. This is resistance. This is resistance too, but really what we're looking for is for these two areas to hold the support for the price action to come to these levels possibly and bounce and head above, and then this would be the resistance idea right here essentially. And we're looking to see, Bitcoin's price essentially bouncing in between this level right here and this level right here. This level right here, if it breaks it, if Bitcoin's price goes above it, then that's bullish. If it goes below this, then this invalidates this. What even is this that we have? It's some kind of like consolidation pattern that it's respecting currently. This is on the 1 minute. This is 1, 2, 3, 4, 5. So we got to close on the 5 minute. And basically, I'm just going to look at this with you guys. And essentially, if it breaks, if it gets rejected right here again, I closed a little more of my trade out as it got rejected right here. But what I'm going to be looking for is if we get a rejection right here, we get a rejection right here, and then we get a rejection right here. Like if we get a rejection, like if we go down, if Bitcoin's price action goes down to this level right here, which is going to be the 0.3381, which is where it's finding support right now on the more midterm time frames. If it breaks that area that I have my mouse on right now, I'm going to close out the Ethereum trade because I just don't see the risk being there for keeping it open. At this point, if we hit this area, unless it's just a quick wick, we would continue to the downside nearly substantially. And so yeah, again, we're looking at this area and we're looking at this area for Bitcoin's price to interact with. So we're just consolidating right now. Buying pressure is relatively decent. Market Cipher calling a bottom right there on the 1 minute. And if that is the case, and then you do have this deep blue right here. Very interesting. It's looking good according to Market Cipher and according to the TA respecting this as potential support. And so at this point, do I want to keep my position open? Absolutely. And then, if we get rejected at this support, maybe take a little bit out there relatively, maybe like 25% of the position out right here, 25% out right here, and then yeah, 50% out right here. If we do break above this area right here, I'm probably going to keep my position open, move up my stop loss if I'm going to go to bed, just because that would just be the way to do it. Like, either the way to do it would be like stay up and trade it, but I don't have that much money in the position anymore. I've already taken so much profits, just because it's just like, why would you keep the position open? It's too risky. We're already in a midterm downtrend. We already have broken the bearish pattern over the consolidation. We already have printed massive bearish candlesticks on the higher time frames, like the 4 and 6 hour. This level right here is literally our last hope for any sort of recovery in the immediate short term. And I could care less either way, and that's kind of, once you're educated, once you're conservative, once you know what you're doing, you're going to get into trades and you're going to be like, I could care less about the price action. I anticipated all of this. And right now, like, the price could literally just tank and it would hit our stop loss and we would make money and close the trade. Not that we already haven't taken massive amounts of profits on this trade. So, I mean, I could care less. And that's, the position that I want to be in when I'm trading. I don't want to be stressed out. A lot of traders get real stressed out. And we just don't want to put ourselves in that type of situation. How many candlesticks? So this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Okay, so we need 3 more. We need 3 more candlesticks. We need 2 more candlesticks to get a close on the 15-minute chart for this idea of this is support. We're looking good. Wow. I'm just hoping we don't go up to this level too quickly, because if we go up too quickly, we could, lose pressure. So we'll go to the RSI on the 1 minute. That would probably be best. So we pull up the RSI, Relative Strength Index. No, not PSI, RSI, bro. What you mean, PSI? Y'all silly as... You'd rather have us pull up the PSI over the RSI? Alright, so we're a little overbought on the RSI right now. So overbought is 70, and we're just slightly ticking above it at like 71. So that's my concern, is that we're a little hot on the RSI. I mean, this is on the 1 minute, so you gotta take it with relevancy, but regardless, yeah, I mean, that RSI is hot. Let's go to the 5 minute, see what the RSI is looking like there, because that's the main thing, is I don't want to see a massive, substantial move up too quickly. Oh, RSI on the 5 minutes, fine. The other thing we would look at is Bollinger Bands. So you got Bollinger Bands? No, they're in here. Alright. We're gonna get some Bollinger Bands. Nah, see, that's exactly what I was thinking. Overextension. Crap. Is that a rejection? Alright, we gotta take some money out. Crap. Yeah. We'll take 25 out. Yeah, that's a pretty steep rejection. Wow, the price is really pumping. Price is really pumping right now. Oh, it's coming back. It's coming back. What the heck? Straight from the grave. Oh, it looks like it's getting rejected again. We'll just take out a little bit right there. We'll see. That's literally trading live though, not financial advice. Oh nice, we broke it. Okay, so this would be like keep the position open. It doesn't matter that we wicked it, like the fact that we wicked it means we broke it. Like technically we want to close above it, but we already closed. We already wicked it, so we already broke that area. That's massive. All right, we've been looking for that for a while. And we're starting to have a little bit of a uptrend. So you have right here this low, higher low, higher low, low, higher high, higher high. And so I'm gonna draw a consolidation or a consolidation. Let's see. I'm gonna close that out because we're already good on that. Oh, there's the Bollinger Bands. There you are, bro. Finally. We're a little overextended on the Bollinger Bands, which is what I was thinking. There we go. Jeez. I mean, like, that's just the market being like, yeah, we just pumped, like, or we just broke that resistance area that we were looking at for a while. Alright. So then what we'll do is, I'm so tired, I'd rather just do a trading channel instead of doing the trend lines. Alright, so there you go. And then right here. And then we gotta just make sure we have our touch points on it. And then I can draw the measured move on that. Okay. Yeah, that's next to perfect. Oh my gosh, look at these touch points. Oh my gosh. That is just gorgeous. Oh my gosh. Like right there. Nah. I mean, this whole area is just perfectly. Is that it? I'm having a hard time seeing. Yeah, that's it right there. Gorgeous. Alright, and then we're going to get the measured move for that. So measured move would be right there. You put that right there. Gorgeous. Now, volume's absolutely on fire, and we didn't get any closes on the candlestick, so yeah, expect a little bit of a retracement. If we could hit this ascending channel and raise higher, that would be absolutely bullish. So we did get that close, and on the 5 minute, so let's see. So that's essentially what we're looking at in the immediate short term. What else we're going to look at is, wow, that is just gorgeous right there. You see that support line? So essentially, support, support. If we could hit that again and then bounce off of it, that would be interesting. Let's see. So essentially from right here, we would be looking at, we're going to pull it up. Yeah, definitely. We're going to be doing a trend-based fib, because on this channel, we know what we're doing. Alright, so, let's see, trend right here. And then the low is going to be this one right here. And then we're going to put that perfectly right there. And then, I'm just going to put this right here. We already know where it is, but I don't want it in our view. So we're going to put it perfectly right there. Gorgeous. Okay. And then again, because we perfectly did this trend base, oh, this is just relatively ridiculously interesting. You have a lot of essentially VPR right here. Price action as potential resistance. Especially this idea right here, support, 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 and then obviously come up, price action, this could hit resistance and then come back down. Potentially we could find support on this, we could find support on the top of this channel. Very interesting. And then, yeah, I mean, the market just seems to be bullish, but it's got a lot of support to break through, both on VPR and previous price action. Yeah, I mean, look at that, that's some high VPR. And then, obviously, this is on, the 5 minute, you go to some higher time frames, that's going to start to show. And where's really the beginning of the downtrend? Because I honestly wouldn't mind putting another fib up to really drive this point home. But essentially we want to break this golden pocket area at least. Hit this at the top, break higher, and that would start to invalidate this downtrend. I mean, this downtrend started all the way up there, so it is technically valid macro. Fibonacci trend based, like we drew it right, and it is nice, it's very nice that we broke this first area right here at the 0.618 level. Again, we did it right, we didn't pull out the Fibonacci retracement, we pulled out the trend based Fibonacci, because we're looking at it from a shorter's perspective. So essentially this is the target we're looking at as potential resistance. We break this area, absolutely massive. We come down here, hit this area as support, bounce up, absolutely massive. This would be bullish, and this would confirm a bullish breakout. How's volume looking? Obviously you have this massive, almost like an Elliott wave, like an impulse wave, but yeah, this is really good. Oh, and don't we have that idea too of the double bottom potentially? Let's look into that. That would be massive. Oh, that double bottom idea that we were talking on was earlier in the other stream that we just streamed. That was on technically this is like a double bottom idea, and this is like a neckline, and then this right here is also like a double bottom, and so we can get measured moves for both of those, and I'll pull those up so that we have this measured move. And so essentially we'd have to look at the market sentiment, but essentially you could take profits right here, get the measured move for this double bottom, take profits at the measured move for that, and then get this double bottom and essentially take the profits for that if you were potentially going off of trading this, which it looks like I'm not recommending. I didn't recommend it, like it's too late I didn't see the setup. I was more focused on the trend, and the trend is way more important right now that we're in that uptrend and we were looking at that Fibonacci. But so this would essentially be the measured move for this double bottom right here, and then this would be the neckline. This right here would be the neckline, and then this would be the neckline right here for this double bottom that we're about to measure. And so essentially you could take profits right here if it continues, and take profits right here if it continues. Definitely, especially in my younger days of trading, I would take profits right there too. Especially because like when I was a lot younger in trading, I was doing like 10x leverage, so like I wouldn't even wait to see how the market reacted. If we ever made it to those levels, I would just take profits, like on something like this fib area. Alright, and then this one will go right here. So you put this right here, and then we're just going to line it up. Perfect. So yeah, I mean, if you were in a long position, essentially you take profits right. I'm not telling anybody to long right now. I'm not telling anybody to long right now. You would, but you would trade the breakout, and we didn't do that. So we enter in from a position of power. You know, you don't just randomly long the market when it looks bullish. That's not how that works. I mean, you can do that, but the odds are not going to be in your favor, like to the point where you want them to be, especially if you're using high leverage. And, you know, on the macro trends, it's still not looking entirely good whatsoever. On the monthly, there's a lot of uncertainty, and that macro pattern that we broke out of the consolidation triangle. So, but we're looking at this area right here, potentially. This area right here, potentially this area right here, and this area right here, all to take profits. These are all measured moves. This is the measured move of this. They're not just random. This is the measured move of this rising channel. This is the measured move of the first double bottom. This is the measured move of the bigger double bottom, which also broke right here. So, and then I can draw them while we're waiting on this. And then essentially, like, even if this does come down, and then what we can do, definitely, is we can give ourselves, now the price action is going up, so this time we're not going to use the trend base, we're going to use the Fibonacci retracement, because if Bitcoin's price retraces from this price spike right here, essentially we could take profits right here, you know, because we're obviously on this channel already in a profitable long. So, or we could potentially look at this area, find support right here, and then move higher. So we're just looking at everything. What else was I going to do? I was going to do something else. Oh yeah, I was going to draw the double bottoms. Some people, if you're newer to the space, some people call it the W pattern. So first one, second one, then you could draw this all the way up right here. First bottom, second bottom, going up. This is the neckline. You draw it all the way like this, and then all the way like this as of right now is the current price action. So this is clearly a double bottom. It is textbook because again the price action does come down, bottom, bottom again, neckline. So this is pretty textbook. So again, these are the areas that we're looking for. This area right here is not significant whatsoever. This has to do with the Fibonacci retracement that we drew. Oh, absolutely massive. Super bullish. Do you think I'm going to take profits right here? I'm not. Like, sometimes when it's like chaotic, like I forget what the market was like. There was one time when like in Bitcoin, like there was one time where like it was just so chaotic, like the measured moves were never playing out and you would just have to take like profits on pumps like that. It was such a weird time to be in crypto. I don't remember the exact time, but these moves seem to be playing out. I'm not gonna take that pump. Are we on the 1 minute? No, we're on the 5. We can go down to the 1. Volume's fallen down, which is not good. Oh, on the 1 minute it's returning. That's good. Is it gonna break its own? Oh, jeez. And this is a reversal pattern right here. I mean, this is on the 1 minute. There's probably nearly no traders looking at this. And it printed a doji. I'm still gonna hold the position just because I drew this for a reason. And I'm not taking closing out some of my position until at least we hit that 0.618 level. The price action after that substantial pump can definitely hit that level, and then that is a massive amount of selling pressure relative to what we're seeing so far. Our trade's not bad at all. Ask me questions if you have any questions. Price is being extremely boring. Some bearish momentum wave action. It's on the 1 minute, so it's not everything. Oh, RSI is trying to cool down on the 1 minute. You can see right here, we're consolidating against the 70, so we could just be trying to cool off the RSI. Let's see, what do we have right here? We have a high. Oh, we have some divergence on the RSI too. It looks like you have a high right here, which is a low, and then you have a higher high right here. You have a higher high right here, and then a lower high right here. So you have some divergence on the 1 minute chart on the RSI. Some RSI divergence on the 1 minute. You see how we sniped that? Let's let the Bollinger Bands. SMA could find support on. Oh, money momentum wave's looking good. Market Cipher is not looking good on this momentum wave though. This momentum wave's not looking good, but the money coming into the space is. Oh, it could be a short squeeze. It could be a short squeeze. Yeah, we just printed right there a potential bottom. It's like only a potential short squeeze. Could go like this. Let's see what my trading group is saying. Oh, is that open interest on Bitcoin according to Bybit? Let's see. Open interest for BTC, which is Bitcoin, increased by 3.79% in the last 15 minutes. And we can kind of see that right there. Let's see what the trading group is saying. Telegram. Somebody's talking about a fractal idea. So they're talking about astrology and how it relates to Bitcoin in my trading group. What the heck? Bro, what are you on about, bro? What is this? Like, don't get me wrong, like, I understand astrology, but freaking what are you doing? Let me see if I can find it. I don't even know where it is. Alright, what's the price action looking like? Oh, look, it's looking like we're finding a bottom right here. The blue, dark blue is getting smaller and smaller. That's indicating a potential bottom right here. We're having an uptrend in momentum money oscillator right here. And so, and the volume. Let's see if we can break this downtrend. We're still in this downtrend. Oh, we broke it. Looking good. This person says astrology, either real or placebo, it affects. Bro, what are you on about? Besides, talking about moons the past day and everything lined up perfectly. Bro, you guys are like, I get astrology. I get that it's an ancient discipline from ancient Egypt and it has a lot to do with like their validity behind sacred geometry and stuff. I get it. I really do. But seriously, you're bringing astrology into trading? Maybe I'm just not on that spiritual level. But I think it's more important to look at the TA than where Jupiter is in the, I just don't. Let me see if I can find their post. I think he might have got it deleted. I think an admin might have deleted his post. Like, don't post that crap. Oh, they posted Elon Musk's thing. There was an astrology post. Oh, we might set a higher high. But they were talking about astrology, but then this was Elon Musk's Twitter page when it said hashtag Bitcoin. In retrospect, it was inevitable. And we obviously know Elon Musk is a technocrat, and Dogecoin potentially had the potential to add a lot of liquidity to BTCD, Bitcoin dominance, and drop the price relative to Bitcoin dominance, essentially pumping the altcoins and further perpetuating Bitcoin into possibly breaking the 28,800, which was its lowest low, which would have set a lower low, potentially dropping Bitcoin's price down to like 24,000, 25,000. And you guys already know who Satoshi Nakamoto is if you follow the channel. So obviously Elon Musk couldn't have that happen. So he tweeted out hashtag Bitcoin, and we'll see. We'll see if that worked for him. He always pretended for the longest time like he didn't know what Bitcoin was, and it was just obvious that that's not reality. And all the institutions are always like, "Oh, we have no clue about Bitcoin," when they were buying it the whole time. Do as they do, not as they say, is what we used to say in crypto like a year or two ago. All these institutions were buying it. They were all saying it's a scam. You think Warren Buffett really thought that Bitcoin was a scam? He's like the he was like the richest person I think in the world at one time. You really think that Warren Buffett called Bitcoin a scam? You really think it was anything other than for price manipulation? Obviously, he knew. He knows about macroeconomics. I know he knows about macroeconomics because I've read Benjamin Graham's book, The Intelligent Investor, and it's a pretty difficult read. It's almost in Old English, um, but I know that Benjamin Graham knows about macroeconomics, and I know that Warren Buffett knows about macroeconomics, and so if that's the case, then of course they know about Bitcoin. Of course and you know, Buffett's never been a big gold guy, and I get that. So gold 2.0, but they knew. Trust me, they knew. Alright, so you got this right here. So potential like support area comes down, breaks it, potential support area, potential resistance right here on the support, comes down back, and potential support. So it's the support flipped resistance idea, and it looks bullish, like we're gonna bounce or potentially close, go down, test it, and bounce higher. But who was it? JP Morgan says in 2017 or something like that, Bitcoin's a scam. Then what was it, 2020? JP Morgan says that Bitcoin's going to $140,000 a coin. Then when was it? It was like 2021 recently. JP Morgan's like Bitcoin's top was 42,000. They know Bitcoin's top will never be 42,000. They know. You can't just come out and say that Bitcoin's going to go up to 140,000 and then, in a few months change your sentiment to that was actually the top. They're talking about, bringing the price down for Fidelity, or not Fidelity, for BlackRock to enter in because they don't have the go ahead on it yet. Lots of manipulation. You just look at the gold market, study the gold market if you want to see manipulation. That's a crime against humanity right there, but like the whole system, I mean. I remember when like Canada was selling its gold for like ridiculous prices to suppress the price of gold. That's money manipulation right there. Supply and demand. Dump a ton of massive supply onto the markets. People think gold, they're like, oh, gold, it keeps up with inflation, but that's not real inflation because, every single year the GDP, because of the accelerated growth, because of the debt-based, credit-based system, you're seeing an average return on GDP of about 14%. And so the inflation on top of that, so your dollars should be appreciating if they weren't debased. They would be appreciating essentially 14% year over year. 12 to 14, I mean, it depends on the year. We're looking for potentially this to hold. If we can hold this level right here, then that doesn't set a lower low. If not, we could potentially hit this area as support. If not, we'll look and see what we got going on. But who was it? Yeah, so 14% is usually what you'd expect. And then this is a double top right here. Again, this is on the 1 minute chart, but it still is going to most likely play out. GDP 14% year over year, and if the current, but you know, it's like inflation is like, you know, with the dollars, it's like with the because they obviously do the whole banking system where, you know, they charge you interest on your money even though they don't put up their own collateral. So there's really no monetary incentive on their end, you know, so they just, you know, take from the supply. But gold doesn't really keep up with inflation. Inflation is like massive. When you think about the military industrial complex, you know, all the money that we lose, you know, putting trillions into the military, you know, economists are like so ridiculously stupid, and they try and convince you in history class. They're like, yeah, when we go to war, we make so much money. No, we do not make money blowing up tanks that cost $100,000. That just comes right out of our pockets. You know, they just made that new plane. It's like $2 billion. You really think that's good for the economy? You're insane. I don't care what any economist is telling you. Look at it. Yeah, we found support right there. You know, the military industrial complex that benefits two people: Boeing, because they create and produce um, military application like planes and things like this, and Steelhead, is it called? There's another like major company in the United States that produces military um, weapons and aircraft and vehicles. I think it's called Steelhead. It's something like that. I think it's called Steelhead. But those are the guys that gain that benefit, and then those companies get massive evaluations. A massive amount of money goes and flows into those companies, and in return, what we reward them with is all sorts of resources, and what they're producing is about to go get blown up in Afghanistan. So they're not really producing anything for the economy, but they're taking a massive amount of resources. Is that good for the economy? Are you kidding me? I mean, you don't even need an economics degree to understand that. And that's one of the reasons we have massive inflation. And so the gold prices have been massively suppressed, and they definitely do not keep up with real inflationary cost. Because there's two types of inflation: there's inflation, and there's actual adjusted rate inflation. And the actual adjusted rate inflation, it's like when the Great Depression happened and they said, oh, we raised, you know, we lowered interest rates, but you didn't lower interest rates with the adjusted inflation rate that was going on back then, you know, and they knew what they were doing. And then the economy collapsed, and they had the ability to print money, they had the ability to lower interest rates. The Fed did nothing. But this time, you know, it's ran by PhDs. I'm not saying the Federal Reserve is, you know, they should have ended it a long time ago, but at this point, it's like a heroin addict, you know. You cut off, you know, the stimulus, and the kid's gonna overdose, literally. Tank the whole economy. Let's see. Looks like we're finding support pretty good at this 0.618 level right there. And then, like I've said before, you know, it's just going to be interesting to see the manipulation in Bitcoin with CMEs and things like this. And then obviously, you know, they want to get into, you know, yes, the derivatives market. They also want to get like an ETF, and we'll see, you know, what kind of, like, you know, if they can put it into like a basket commodity and do something like like what they do with gold and silver, where they have the contracts, but nobody really, where like 10 people think they own, you know, the gold and the silver, but they don't actually take physical delivery of it. And people say you can't take physical delivery of Bitcoin, and that's not true. You absolutely can. Each Bitcoin has its own private keys, and only one person has access to that at a time. If you send your Bitcoin to somebody, that person now has access to those private coins. And so the second that you put derivatives markets, the second that you put paper notes in exchange for Bitcoin, that's the exact same, rabbit hole we started with the goldsmiths, with the IOUs, which started the entire banking system. So, which started the money manipulation and money laundering to begin with. So we'll just see how everything plays out. But I mean, if you have the physical Bitcoin, it's just like any gold bug will tell you. If you have the physical gold, that's what you want to do. You want to have the physical Bitcoin. You don't want to, have your Bitcoin on Robinhood because you don't even own it. Just like when you buy a gold stock, you don't really own it. You don't really control it. And people that aren't really educated in finances, they might say, oh, well, why does it matter if I don't own it? Because if you don't own your own Bitcoin, then somebody else can be saying that, oh yeah, sure, you own your Bitcoin, when really they're lending it out to other people. Not your keys, not your crypto. That's I love the crypto community. They're pretty woke. Let's see how many candles we got here. 1, 2, 3, 4, 5. So we got a 5-minute candle close. And we're on 7, so we need 3 more closes to get to 10. But we need a 15 though, because on the 10-minute chart. So, I mean, if you're just tuning in, we're looking at essentially the 618 level. It looks like we temporarily found support on it. And then we're potentially looking at taking profits at these levels, measuring some double bottoms out. So I'll move it right there. So you can see those 3 lines are measured moves for profits, but we're just waiting right now. Definitely we are consolidating. Oh my gosh, look at that consolidation. I'll just draw it for anybody, so you can get a clear consolidation view right here. So you draw the top to the bottom, like right here. Confirm the touch points. So you have 1, 2, 3. It's kind of sloppy. See 1. Oh, it looks like it broke that trend already. Yeah, perfect. Yeah, trend got broken, which is nice. So we broke out of the consolidation pattern on the volume. Oh, and the money momentum wave, which is different than the volume. So the volume's like how much is being traded. This is how much is being added into the space. And that's going up, which is good. We just want to see this trend line be broken. We want to see this. Oh, we got it. Gorgeous. Let's see what else we got. I'm just so surprised, like, we're not getting any uptrend signals, we're not getting any downtrend signals, we're not getting any longs, we're not getting any shorts. You do have this massively bearish anchor wave, trigger wave, smaller trigger wave, even smaller trigger wave, and then essentially right here what we're looking for is, let's see, get the, right here, right here. Essentially what we're looking for is a smaller on this white and then a green dot like this to confirm a potential bottom. Oh crap, we broke through that 618 line. I'm closing my short right here. Let's see if I'm in still profits. I mean, I put a stop loss on it, but I don't know what the funding rate's like. I don't know if I'm gonna get funded, because whenever you have a long open, like as you continue to have the long open, they cut Oh, I don't. It's another 7 hours till I have to pay for a funding rate, and this position will most likely be closed by then. Yeah, so I'm potentially closing my long right here, because I'm just like, at that point, like, the risk is just not worth the reward. And it's okay to take profits for sure, especially when the charts are just not in your favor. I mean, to me, this just looks like a long squeeze scenario. Oh, we got that close, or we got that bottom potentially. The thing is that this is on the 1 minute, so take it with a grain of salt. You know, this isn't like on the 4 minute supported by volume. That would be relatively substantial, but take this with a grain of salt. I mean, it looks like it wants to move lower. You see right here on the bands. You see right here it comes down on the bands, finds support on the bands, comes up, and essentially it could continue to go down right in the outside of these bands. And we do have a decrease in selling pressure right here. Decrease, 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 and then flip. Yeah, essentially, yep, we broke that. And then obviously that could just be market manipulation, nearly definitely. It's the 1 minute, so that tends to happen. And then this is the highest VPR support we have right here. Oh, it broke through it. That's crazy. If this is the local top in this immediate short term, then we have, you know, a high, lower high, lower high, low, lower, low, lower, low, lower, low, and we're starting to downtrend potentially. This is almost like a gravestone doji right here. Massive bearish engulfing. Again, it looks like we're going to test that outside of the Bollinger Band, so we could come down, maybe get overextended, come back into it, and continue down. Let's go on the 5 minute, see how these are. Morning, it's me from yesterday, noob, but on another account. Kill, you saved me 2 times. Very good yesterday, thanks. And Elon Musk, yeah, so Elon Musk, yeah, he pumped the price, but it's not looking too hot right now in the market. So, there's a lot to go over. Let's see, we gotta get off the 5 minute. Let's see, so right here, go to the 4 hour. Zoom in. There is a massive, oh, we gotta get rid of that VPR. Alright. So there is a lot to go over. So we're kind of looking at this uptrend that started, and then essentially we had this downtrend. And then as we had this downtrend last night, we had this pump, which was the Elon Musk pump. And then essentially we got rejected right here, got a local top at this area right here. I drew a Fibonacci retracement tool, and I don't have, this is a trend-based fib, but I had a Fibonacci retracement tool drawn up right here, and essentially we were looking first resistance, like right here, second resistance, third resistance, and it broke through all the resistance lines, so this uptrend idea was invalidated by the Fibonacci retracement. So then what I did is I drew a trend-based fib, which we have right here. Let's zoom in. And essentially we're looking to see if we're going to hit this part of the trend-based fib right here, which is the golden pocket. This is the top right here on the 0.618 to the bottom, which is on the 0.786. And essentially we want to see if we're going to go up here, get rejected on it, and then continue lower, or if we're going to hit that area and then break it and move higher. So those are the major ideas that we're looking at right now. Going down to the smaller time frames. Let's see. I'll answer your question in a second. I just want to get this. Should be 15. So we had an uptrend right here very clearly. It's harder to see. We drew this on the 5-minute when we were working on it earlier. And essentially we had this uptrend right here idea. It was a lot clearer on the 5-minute. We had the breakout. We drew the measured move for the breakout on this uptrend, which was this level right here. And then it looks like the momentum was a little strong, and it looks like we could be potentially testing the top of this channel right now and then moving higher potentially, or breaking back into it, or we could be, this is the top essentially right here of this. Let's draw this perfectly, so it'd be right here, and then essentially this is a Fibonacci retracement tool. This is a trend base, and essentially we're looking to see, is it going to hit this, accumulate in the golden pocket area and move lower, or move higher, or is it going to hit this level right here and move lower? Alright, so yeah, volume's important for sure. When train jumps or down, I try and catch on that train. How did you learn to read the charts, to speculate when trends are? Also resources, learned candlesticks, fib. So, I've been trained in a lot of different books and stuff, so I wouldn't even really recommend saying the word speculate. A really good recommendation that I recommend is something like Investopedia. I have a lot of different books that I've read. I have them on my phone, but they're all just, you can look at you can go to any like bookstore or anything and look up like trading patterns. You want to see patterns like double tops, you want to learn double tops, you want to learn double bottoms, you want to learn head and shoulders, you want to learn inverse head and shoulders, you want to learn, you want to learn those basic trading patterns, and there's a lot more of them, but those, like if you're getting a book and it has those trading patterns in it, like if you go to the bookstore or something, like you can just literally look at it. I got some PDFs of the books that I was looking at. So yeah, you want to get a book on trading patterns, and you can look at stock trading patterns, and we share a lot of the same as the stock market. And then as far as candlestick patterns, you want to learn basic ones, and you can get a book on candlesticks, which is what I did. I got books on trading patterns, and I read multiple books on trading patterns. I read multiple books on candlestick patterns. I read multiple books on Fibonacci, or on Fibonacci retracement. I think I've taken 2 courses on trading, and then I obviously have a massive amount of history in the space. And when you see me talk about altcoins and blockchain technology in general, you start to see that that's pretty apparent. But so we're looking at this level right here. Again, if we hit this level, I'm closing out that Ethereum long that we started entirely in profits, but it's just not worth the risks to me at that point. So like good resources would definitely be like books, and like, yeah, like I said, like, and like what you said, trading pattern books. candlestick books. And then the Fibonacci retracement is huge. You can learn about that on Investopedia. Forex books are actually also very important. And you can read Forex books, and Forex books will teach you like support and resistance type ideas. Like right here, we potentially have, we come up right here. This is potentially resistance. This is potentially resistance. And then we could come down to this level right here, hit it, and then potentially find support. And that would be a support type. That would be a resistance flipped support idea. And so you get a lot of that in Forex. I've seen a lot of Forex traders. I've recommended Forex to a lot of people. But in regards to Bitcoin, like if you read a Forex book, those are also relatively helpful. Yeah, we're about to close that long. But so I've read a few Forex books. Those were helpful, and they're 100% relevant. Again, Investopedia is really good, and then watching people on YouTube is really good. So like Crypto Jeb's really good. Who else is really good? Crypto Jeb's really good. I like Crypto Zombie, but Crypto Zombie doesn't always go like really big into the TA, and they all tend to do more of the macro time frames, which is fine. But this channel is a really good resource because I go over all the macro time frames. I go second per second on the market, and I also implement. Let me close this position potentially. I go over the macro. I go over everything. I literally trade live for you guys. Like I'm literally about to close the remainder of my Ethereum trade like live. So in profits. So I mean, this is one of the best channels by far if you want to learn. Yeah, we're gonna close it out. So, but that was a huge position. I'll look at some books, some trading websites. Yeah, so like PDFs are huge. That's what I used a lot. And just like you can literally just like read the title. So potentially right here, we're still looking for potential support right here. It looks like this idea that we're gonna break into this rising channel is not gonna go over. But yeah, like it's monumental to just invest in your education, and you can't go wrong reading a bunch of books and watching videos. But I would recommend the books first. Like this video is obviously going to be decent, and like I always go over the TA, and I'll always be here to go over the TA. But like books are going to be massive. That's probably like sitting down and reading books on TA is probably the legwork that nobody wants to do, but that's going to be the most monumental. Although you're not going to find things like this is the VPR. What is this? The PVR support area, and basically this factors in, this is a built-in indicator into TradingView, which factors in all the price action and puts up the basically how high, like if the higher these bars are, the more resistance area that Bitcoin has potentially in the price action. This is absolutely massive. You're not going to find this in a book. Ichimoku clouds you'll definitely find in a book. Super trend's not something that you'll find in a book. So like this is just an indicator that basically tells you when to buy and sell. We go over Market Cipher, which is absolutely massive. Market Cipher, this indicator I have right here, cost at least, you can rent this indicator for like $500. Market Cipher, it's a lead indicator for it's one of the industry standards, and I not only go over Market Cipher, but I also go over like the interpretations. Like this is printing a potential top on the 15, relatively significant, but not like everything. You know what I mean? Like it's on the 15, so like in TA, you're not gonna really learn this from a textbook right away unless you learn like trade. I did read one of those good like basic books, or no, it was written by a Rockefeller. It was terrible. I read Technical Analysis for Dummies like back when I was learning. That book was awful. Oh my gosh, it was written by a Rockefeller, and it was just ridiculously bad. But they go like if you read a general book like that, they'll teach you that like the more higher the time frame, the more significant. So this is the 15, so this is relatively insignificant. So like all the TA that you see, like this is like the RSI. You learn about the RSI. As far as indicators go, indicators are extremely important. So things you want to learn about are definitely like RSI, MACD. What's another massive indicator, or they call them oscillators? I'm trying to think off the top of my head. I'm pretty tired, but volume's huge. Like, she was talking about how she uses volume. Volume's absolutely massive. And then yeah, Fibonacci retracement. Like when I first joined the space, like a long time ago, I was like, Fibonacci retracement, this seems dumb. Like how is this a legit indicator? But Fibonacci retracement in cryptocurrency is by far one of the most important tools that any trader can use. And you see some of the biggest people in the space constantly using it because it is just so ridiculously, massively accurate. Just, can you please explain basic signs to know where to buy and sell, like textbook signs? Yeah, so, like I was trying to tell you, like last night, it's like this. You study things like consolidation triangles. So, like, what you would learn in a textbook is you would go for like maybe you have a consolidation pattern like this. And basically the price action would be bouncing around in this area, and then essentially what you would do is you would set up, if the price action broke above this area and it closed on a high, if it closed on like a 4-hour candlestick, which would be called a confirmation, so you would have essentially possibly a consolidation pattern like this. So how you confirm a consolidation pattern and draw these lines is you look for 3 touch points. So you look for 3 candlesticks that touch against a certain point, and that's the trend line that you draw. And you'll see me on the channel always drawing these consolidation patterns. But essentially just right off the bat, you'd have a consolidation pattern like this. And then essentially when the price action breaks above that consolidation pattern, essentially you'd bring your take profit, or you'd take your, probably put it like right, I'd put it like right here. Yeah. Oh no, you'd put it right here. That would be really risky. If it was extremely bullish scenario, you could put your open position right here. But essentially what you would do is you would take something like a consolidation pattern like this. As it broke out to the upside and there was a 4-hour candlestick close to confirm that it broke out of this consolidation pattern, you would essentially open a long. And if it's going up, if it was going down, you would short it. But if the macro time frames are not in like a bull run, like you can short like the pattern, but to really confirm a pattern, you want to make sure the trend's in your favor. So if we're in a massive uptrend, let's see. So we're looking at this area right now to see if it holds. So if it's in a massive uptrend, you would you would, and it broke to the upside, then this would be a decent pattern to trade, because not only are you not fighting the trend, you're going with the trend, but you're also trading this consolidation pattern, which has a measured risk. So essentially you don't want to lose all your capital. A lot of real trading, like a lot of what you'll learn in a textbook, is very calculated risks. And so you have a calculated risk right here of you're only losing 0.21. You can see it right there. You're only losing 0.21% of your capital on this trade if it goes south for you. And then right here, you're potentially gaining. What you do on a consolidation pattern like this is you would wait to the start of the move. So like if your first touch point on your consolidation pattern was like right here, you would measure it from the widest point on this consolidation pattern, and then you would put this right here and this is called a measured move. So essentially once it breaks out of the consolidation pattern, you want to know how high it's going to go. and you have this right here, and this is a 5-to-1 reward ratio. So essentially, this would be you would make 1% or lose 0.21%. And on leverage, if you're on 5x leverage, this would be a 5% return. Um, and you're only risking a very small percentage, 1/5 of what you would gain. And so essentially, you can take 5 of those trades and just make one of them profitable, and you'll come up on top. If that makes sense. I hope it does, because that's like a textbook trade that you would get. Nice, thank you. Question. I have some crypto. But I'm trying to get more. If you had 500 and you were trying to double your money, what would you invest? So you're looking for a 100% ROI, return on investment. I've been going over this a lot, and Ethereum is definitely underrated. But what I would do is, like I just closed my Ethereum long, and I've been looking at these markets all day long. So essentially, what I would do is I would cost base average in. So cost base averaging, if you hear, one sec, I'm gonna plug my laptop in. Okay, so cost-based averaging, if you hear it in cryptocurrency, a lot of people say that cost-based averaging is where you put in like, $10 like every day or whatever, or every week or whatever. But cost-based averaging is just cost-based, so like your cost basis for how much you're buying. So like if you were to buy, let's say Ethereum at $1,300, that would be your cost basis for how much it cost you. And then just average, so cost base average, so then the average price it cost you to buy your Ethereum. And what you want to do is you want to lower your cost base average by buying in dips. So like right here, you would buy a dip. So maybe if you have 500, then you would put maybe 100 in on Ethereum right here. And I'm not saying that's the case. We go over the TA, and when we think that the dip is over for like Ethereum, essentially you would put like 100 in that right there. You think maybe you're wrong, and it continues to go down. You put another like 100 in as it continued to fall, as it was touching like different areas, and you would cost base average in. So essentially, you're not risking everything, especially if you're a newer trader. You don't want to put everything in lump sum, and then especially because the markets overall are not looking too hot right now. Maybe in a bull run, in like the monthly candlestick on Bitcoin is potentially printing a bearish doji. So this is very significant. And but if I was in your position, and I am in your position where I do buy crypto constantly, I put nearly all my money into crypto um, that I get right now. And I've been putting a lot of it into Ethereum right now. And I longed Ethereum when it was around 12 something, and we just closed in profits. But so to answer your question, I would do Ethereum, I would cost base average in, I would be cognizant of Bitcoin is not in the best situation right now, and try and catch those dips on Ethereum. Ethereum is massively undervalued. Cost-based averaging is just buying every week, whether it's high or low. So yeah, that's what they say. That's what they say. That's what they say in all these different crypto channels. But that's not like that's what I was trying to explain to you, is that like if you're in stocks, if you're in anything else, like if you're in any other market, that's not how it goes. Cost-based averaging is averaging your cost basis. Does that make sense? So like if you're buying Ethereum for 1300, that is your cost basis, and then you're averaging your cost basis by buying in increments. Just like you can cost base average out of a long position, which is what I was just doing. And when I was cost base averaging out of a long position, I was just constantly um, it wasn't based on time. I wasn't looking every single hour. Obviously, that would be, that wouldn't be smart to look every single hour and just close out a percentage of my long position. No, I was looking at the market, and as the market seemed to be turning, towards the downside more and more, I would take percentages out of my long position, and I was cost-based averaging out of it. I was constantly bringing the leverage, the the amount of money that I was putting in less and less. So I was cost based averaging down on my position on leverage. But when you're opening a long position or a short position, if you let's say you put in a little bit right here, and let's say you're like, oh my gosh, this looks like relatively. I would never long this right now, but let's just say you were to long this, and you're like, okay, I'll put in, if you have $100 to long, maybe you put in $20 right here, and then if it pulls back even more and you're like, oh well, this was a good buying, which is not true, but you're like, oh, this was a good buying opportunity, maybe I'll buy some down here. You put another $20 in, so then your average position, your average cost basis is lower, so you're lowering your cost base average on your long, which would potentially, as you see upside, go up more. So I use it for both entering into long positions. I do it for buying crypto, and I do it for exiting out of my positions. I mostly long the crypto market because it's an anti-inflationary asset. Ask me any other questions if you have any other questions whatsoever. Yeah, this is the major area we're looking right here for resistance. So if we can hit these, so like for example, I was looking right here at taking profits right here, and then maybe I take 25% right here when I was in my long position, maybe I take 25% right here, maybe I take 25% right here, maybe I take 25% right here, and that would essentially be cost-based averaging out of my position. So essentially it's very hard to call the exact top, it's very hard to call the exact bottom, so this way I'm averaging out of my position and doing it like strategically. And these aren't just random lines. That would be silly if these were random lines. This is the measured move for this move right here that we broke out of. This is the measured move for a double bottom that we went over earlier, and this is the measured move for an even larger double bottom. So these are all measured moves, and then this is a Fibonacci retracement area. And so those would all be excellent places to take profits on a long. Awesome, thank you. Can you explain longs versus short? Is longs just when the trend is going up, going upwards a lot? So a long is, when you're longing the market, you're essentially betting that the market is going to go up, and you're basically placing a bet saying it's going to go up. Longing the market is different than just buying. So you can buy, like, let's say Ethereum, and you can just purchase it, and you own some Ethereum. Maybe you don't own it if you're on Robinhood, not your keys, not your crypto, but essentially, you still have it, and they'll respect that price. But regardless, whereas longing the market is usually when you're on leverage, when you are on margin, where you are essentially telling your brokerage account that you're betting that the market is going to go up, and you're borrowing money basically, it's not like a call or a put like on options, like on stocks, but you're borrowing money essentially on margin, basically telling people, or telling your brokerage account, yeah, I think it's going to go up, and as it goes up, you're rewarded, and as it goes down, you're penalized, and it goes up or down exponentially based off of, not exponentially, but relative to how much leverage you have, whether it's 2x or whether it's 4x. Like if it's 2x, like you would essentially, like if it went up 1%, you would essentially gain a 2% ROI, or if it went down 2%, you would gain a 2%, you would lose a 2% ROI. It's hard for me to watch with all the colored lines. I need basic for useful screen. Yeah, so let me just break everything down because everything right here is extremely important. So it will become more basic when I explain it to you. So right here is the swing low, and this is the swing high, essentially of this pump right here. So you're just isolating this part of the screen right here. This part right here, we're just isolating this part right here. And right here, we clearly had a pump up to this right here. And we were just essentially seeing, how strong is this pump? What's the possibility of a continuation on this pump? And so what we did is we pulled out a Fibonacci retracement tool. So we measured from the top of this Fibonacci all the way to the bottom of this Fibonacci. And essentially this is the golden pocket, this is the main area we want to see, and essentially if it was a textbook long position, essentially the price action could come down to this golden pocket, this 618, again like on TradingView they don't have the golden pocket, but it's this blue, and then essentially we were looking for a move higher, which didn't happen. And so now we're looking at these levels for possible support. If it breaks below this level, then this pump right here is essentially invalidated, and we're looking for a potential reversal. This is at the 0.383 level of the Fibonacci retracement. Right here we have a bigger Fibonacci retracement. This is more on the macro charts. This is a trend-based Fibonacci retracement, so it's the exact opposite of this. In trading, that you'll learn that everything is an opposite of each other. Like for example, right here you have what's called a morning star pattern, but if it's the exact opposite, if you have this on top and you have the wick on the bottom, then it's a hammer stick formation. And so essentially this is a reversal pattern, essentially showing that the price action would go down. Whereas the exact opposite, if the top of this was right here and then the wick was on the bottom, then that would be a hammer stick, and that would potentially show a reversal heading up. So um, everything's an inverse of each other. So like for example, you have this right here, which is a bullish engulfing candlestick. You have and the way that you think about it to help you memorize it is you have this giant candlestick up, and then you have this candlestick engulfing it. This candlestick right here is entirely engulfing, and this is bullish, it's heading up. So this is a green bullish candle engulfing the previous candle, so this is a bullish engulfing. Whereas if it was a red candlestick, then it would be bearish engulfing. So everything has a like a positive and negative, like a double top formation. When you learn about a double top formation, the inverse of that is a double bottom formation. So this is essentially looking to see, you know, is this just a blow off top? Is this the top, and are we going to head lower or not? And this is based off of a long position, whereas this, it's harder to see on the 15, but this is a Fibonacci, and this is the exact opposite of that, called a trend-based Fibonacci. And essentially what we're looking for is on the more macro scale that I can zoom out to. You're essentially looking, is this, going to hit this level, which is the golden pocket, which is the same spot right here that we were looking at before, but now it's on the bottom because it's the exact opposite. And are we going to hit this area right here and then move lower, or are we going to break this area and then go higher? And then obviously right here, this, I usually draw these as support boxes, but we can just make this blue so it's not as rainbow. But yeah, so let's see. This is, this is the VPR support, so this basically shows, how much support, and the fact that Bitcoin just broke through the support right here on the 15 is pretty massive, showing a lot of buying pressure. This right here is basically, this dot is basically saying that this is a bottom, and this dot right here, this dot right here is basically saying it's a top, and then this dot right here is basically saying it's a bottom. When it's green, that's bullish. When it's red, that's bearish. When it's bullish, that means the price is going to go up. When it's bearish, that means the price is going to go down. I just longed, it's hard for me to, I just longed at 34.2. So essentially, if you were, if I was in your long position right now, what I would be doing is I would readjust my Fibonacci retracement area right here, and I would see, how sustainable is that pump that we just had. So I would readjust, before we were looking at this pump right here, but in the immediate short term, if I would just enter it into a long position, I would do the swing low, which would be this area right here, to the swing high, which is right here. And I would essentially be looking at these levels. Essentially, I would want to see this level and then a continuation, but I would continue to look at the 0.5, and then this is essentially where I'm not telling you what to do, but I mean, if you're going off of the sustainability of this pump right here, after this level right here, it would be a potential reversal of this. Although you'd want to look at the trend. The trend does seem to be trending upwards in the short term. And we could potentially find support right here on this giant Fibonacci right here at 34,085. But you enter into a lot of trades. A good way of like entering into a trade and making sure you have your stop loss so you're not losing any money is pulling up these moving averages. So one of the things that you would want to learn about, if you're new at all, is you'd want to go to EMA. EMA stands for Exponential Weighted Moving Average. And you would look at the exponential weighted moving average. This is the 20, the 50, the 200. So these are all relatively significant. And you would look at these different moving averages, and essentially how these are calculated is like, for example, you have the 20, which is right here, and the 20 is EMA is the average price of the last 20 days is what that line represents. And when the smaller line crosses above one of the bigger lines, like right here, it's hard to see because this candlestick is covering it, but right here you have, let me zoom in. Right here you have a cross between, it looks like the 50 and the 20 EMA on the 15-minute. So essentially this is called a bullish cross, which it signifies that the price action is going to go up. And so you would want to find potentially a golden cross, which is a spot where the 20 crosses the 200 or the 50 crosses the 200. You would want to find a moving average that crosses bullish, and then essentially you can enter right before it crosses, and then there's most likely going to be a pump to continue that. Like if you would have entered right here, there's a pump, and you can essentially, that gives you the momentum to enter into a stop loss, so that you get that nice pump, and then if it just crashes down, you have your stop loss in place, and you're nearly guaranteeing that you can put your stop loss above your long position entry price. It just seems like you take a lot of trades, and so that would be a good way to protect your capital and make sure that you're getting those stop losses in. So that's the EMA. You also have the MA, which is just moving average. So take we'll just go on a higher time frame and see if we can find any more examples. Take that off. We'll go down to the 5-minute. We should find one on the 5-minute. But then obviously, again, like I say, the higher the moving average, the more substantial. So these ones are not going to be as substantial. So you have this one right here. You have a cross right here, a bullish cross. So essentially you have a high moving average moving below. And so right here you have the cross, and then you have this pump. And so essentially what you would do is you would find this cross, look for a good setup, and then once it crosses bullish, once a moving averages crosses, like once a smaller moving average, so like if this was the 20, if the 20 moves above the 50, that's bullish. Now vice versa, everything's an inverse of each other in trading. And so right here you potentially have a bearish cross right here. This is nearly a death cross. So you have the 20 crossing below potentially the 50 and the 100. So this would be massively bearish, if that makes sense. So I like to have my moving averages colored. So these are some EMAs too. But essentially just looking at the EMAs, looking at the MAs, crosses. This is massive right here. This is my favorite one right here. We'll pull that up and we'll look at that in a sec. So that's the purple line. Yeah, it's the fat purple line and this line right here. So when this is the, what is this? This is the 50. This is the 50 and this is the 200. Whenever the 50 crosses above, whenever this line right here crosses above this line right here, it's a massive pump. And just like on the time frames, when you have a lower time frame, it's less significant. When you have a higher time frame, it's more significant. When you have a higher moving average, it's more significant. So the 200 EMA, or in this case the MA, is more significant than like the 20 MA. So this 50 MA and this 200 MA are both very significant. And when they cross, it's called a golden cross because it's not like the 100 moving above the 200. It's the 50 moving above the 200, which are both significant and they're both far away from each other. If that makes sense. Like if the 20 crossed like the 200, then that would definitely be a golden cross. Or if the 200 moved below the 20, then that would be a death cross, which would be, and you can look those up. Those are on Investopedia, but those are bearish and bullish ideas. Let's see, I'm trying to see if I can find another example. But potentially if you get into like a golden cross, the price would most likely pump, especially if you're on a higher time frame. And time frame, if you ever see on the textbook, if it ever sees TF, TF is time frame. Let's see, doesn't look like we're going to see any. Yeah, it kind of makes sense. I'll definitely got to read some books ASAP and check out Investopedia. Yeah, Investopedia is what is like the best like beginner resource? Probably like Investopedia, like what I say about Investopedia is just the validities there. There's a lot of places, there's a lot of people that are just like straight scam and they don't really know what they're talking about and that it's just not a good place to be. But if you stick to textbooks and if you stick to like Investopedia, like those are both very valid sources. A lot of people just want to sell you a course. On this channel, we will never sell you a course or like any of that crap. Um, we're I make plenty of money trading right now. And I hold a big bag. I was telling everybody to put their life savings in at freaking 11,000 on Bitcoin. Because like just the risk to reward ratio was so good back then. And I put a substantial amount of money back then, so I don't need anybody's money. I'd rather just help people out. So yeah, we're never gonna sell you like some scammy course or say like, whatever. Stock investing for dummies PDF. Yeah, was that the one I read? Is it by a Rockefeller? Because that one wasn't very good. Or maybe that was technical analysis for dummies is what I saw. But yeah, something like that is definitely like a general book, and then they'll go over like Fibonacci, but then you want to get like a candlestick pattern, and don't go nuts with the candlestick patterns. You really don't need to. Like I said, you want to know like bullish engulfing, you want to know shooting star, hammer, you want to know you want to know like doji. Doji is huge. Like just like there's one right here. Essentially, if we had a little bit of a smaller body, but you don't need to memorize every single candlestick pattern. Three white soldiers, three black crows. Um, there's some like you really just want to get the basic ones, like all the basic ones. Like this is a morning star, bearish engulfing, bullish engulfing, uptrend. Like you just want to be able to like read the market, but like I understand all the more advanced patterns, but here's the thing about technical analysis. I'm always going to tell you like exactly how it is because like I have that whole scope. And the more complicated the technical analysis is, like one of the things you can look up is Elliott wave, but a lot of people in the space have a hard time trading Elliott wave. A lot of the people have a hard time with advanced candlestick formations, and the harder an indicator is to read, the less people are going to follow it. And the less people that are going to follow it, the less the market is going to react to that said indicator. So something as basic as like RSI and MACD, these things everybody in the space uses, and so they are massively significant. Where something like Elliott wave patterns, ABC, impulse wave, correction wave, like those type of things, those are very advanced, and the market's not going to respond to them as well, most likely because not very many people know how to trade like that advanced. And so, when I say like stick to the basics, like I mean that it would be in your best interest to stick to the basic candlestick patterns. There's probably like 10 or 20 that you need to know. Probably like 10 to 15 to start out with, and then I wouldn't waste my time just memorizing every single candlestick pattern in an entire textbook. Like you can do that in the future, but I would at least learn basic chart formations like like double bottoms, double tops, head and shoulders, things like this, and get those basic patterns out of the way. Cup and handles, another basic pattern that we don't see a lot of cup and handles on Bitcoin, but that is definitely something that is important. Things like that, and then Fibonacci, and then moving averages, and those oscillators. I longed and I got out. So much stress, ha ha ha. I mean, I would just recommend like low leverage and like really come in with a game plan. You know what I'm saying? Like, for example, when we longed Ethereum, like we were trading out of like a double bottom or something. I don't remember exactly what happened, but we came in with a very specific game plan, and I had very specific if-then statements, like, and very specific, oh, well, if it hits this level, then, this is extremely bullish and a continuation to the upside. And then I had points where I was like, okay, this is where, I need to sell because I know that at this area it's not going to do as well. And so yeah, again, like just to like start out, like those consolidation patterns, like if you get a really good textbook, it'll tell you the exact, like they'll show you the setup like how I showed it to you. And those risk to reward ratios are absolutely massive. You shouldn't really take a trade under a 3-to-1 risk reward ratio, just because of just the percentages of it. Like for example, I was telling my friend before, with risk reward ratios, because we were talking about he knows that I'm like very involved in the equity markets and whatnot. Specifically, I'm just really focused on crypto right now. But this is a one to, where is it? That's massive. But essentially, you know, if you look at this, if it's like, if you have the same risk to reward ratio, like if you're like, this is my stop loss right down here, and then this is my take profits right here, and they're equal to each other, then you have a 50-50% probability of getting stomped out or not. Whereas if, you know, your stop loss is more strategic and is placed right here in an area where, you know the price action is going to pump up at least to begin with, and then you have something like this would be, 5% take profits, and then this is 1% stop loss. Essentially that's a 5-to-1 risk reward ratio. What I'm saying is you want like at least a 3-to-1. So manage risk, so you don't lose all your capital and you can continue to come in the game. You should have something like this, and you get those. You're like, well, how do I even set one of those up? Like, why would I take one of those? And you can do those, set those up on like double bottom patterns, double tops. So just make sure you learn those. Also created by co-founder. Oh, I'm trying to get on ADA currency. Yeah, so ADA, yeah, so ADA is the biggest currency that we promote on the channel, Cardano. It is by far the best. Although on this channel we talk a lot about the paradox of cryptocurrency. And essentially, while I agree with you, and I've done, written massive reports on Cardano, um, and I was telling people to get Cardano. Like I was heavily accumulating on it when it was 10 cents, and it's up like a 400% ROI I think from then. But essentially, what we're looking at with Cardano is, yeah, it's a great cryptocurrency. It's pumped a lot, and I'm really hoping it cools off and we can get some. I actually have a chart pulled up on ADA. Let's see. I actually have like all the graphs and everything. I go over ADA a lot, so it's good that you're subbed. This is one of our favorite cryptos on the channel by far. It's gonna outperform everything in the long term, but everybody's putting their money in Ethereum right now. So, it was like what I was talking about. Essentially on this channel, what we're looking for is potentially getting a buy-in right here is what we were talking about, like around 31 cents, 31.8. And this would essentially be, this is a ginormous ascending wedge right here. And we would want to see this supported by Bitcoin dominance. So if Bitcoin dominance continued to drop and it went down to this level, this is definitely an accumulation zone. Again, cost-based average, I would only buy like at max 50% of my position right here. In case it does break out of this position and go lower, then I would accumulate and cost-based average in a little bit more. But yeah, we definitely are big ADA guys here. ADA is backwards compatible with Ethereum. Like, I don't even have the energy. I'm so tired. But yeah, ADA is good. Sadly, I got into crypto and ended up back in the wrong altcoins. I should have been buying after the fact. I'm kicking myself, but I'm trying to learn about what I'm investing in. Also, Ethereum is at the highest it's ever been, and I know it will most likely going to dip back down. Now I feel like we're repeating late. So, so Ethereum is highly correlated with Bitcoin, and Bitcoin is like twice its all-time high. That was kind of the sentiment back then, but a lot of institutional money is massively supporting Ethereum. Yeah, Ethereum has a lot of what's called dApps, and maybe you've researched these with Cardano, because Cardano is also a platform that uses decentralized applications to build on. like it's a platform to essentially build decentralized applications on. So maybe you're familiar, but essentially DeFi, decentralized financial applications, these are massively important into the market. You have things like Compound, Aave has been doing incredibly well. But my point is this: Ethereum is extremely developed. The only problem with Ethereum that is absolutely massive is its relatively high, not even relatively, absurdly high gas fees that it's currently facing. And, that's one of the things that Cardano easily solves. But a lot of institutions are looking to Ethereum as a conservative investment because it's a number two cryptocurrency with a lot of development on it. And even though we hit that all-time high in 2017, I don't know if you know, but the markets in cryptocurrency are cyclical. So cyclical means like cyclical, like they move in cycles, and there's bull markets and there's bear markets, and so it wasn't necessarily 2017 wasn't necessarily a bubble, and those cycles have been going on for a long time, and so I don't think that Ethereum's like undervalued. I think it's very, very, or I don't know what I said. I'm so tired, but I don't think Ethereum's undervalued or overvalued at all. I don't think it's overvalued at all. I think it's very undervalued. I think once it hits its all-time high again, so its new all-time high is around 1474. Once it breaks that and sets a higher high, it's in an uptrend. We can go to the Ethereum chart for a second. XRP any good? Oh my gosh, I'm so tired. You're gonna make me talk about XRP? Alright, sit down, pull up a chair, because, like I said, crypto experts. So, a lot of new guys get into the cryptocurrency space. So, let's first talk about XRP's use case. So, a lot of people don't know XRP's use case. XRP's use case is essentially they want to support banks. And so basically the main problem that banks are having right now is it takes it a long time for banks to wire transfer money from bank to bank. So usually it will take about 3 days to wire transfer from one bank to another bank. A wire transfer, it's extremely expensive relative to what XRP can provide, and the volatility on it, you would think that 3 days time isn't a lot of volatility on whatever currency, but like let's say you're talking about United States dollars. In 3 days the DXY tends to move up and down, and you actually do lose or gain buying power on the money that you're wire transferring, whereas a XRP or Ripple, what they're doing is you can essentially make a wire transfer across the entire planet in approximately 3 seconds, and the fluctuation between Ripple's price in 3 seconds is significantly less than what you would experience wire transferring something and taking the hit of the DXY fluctuation, because currencies do fluctuate in over those 3 days. And when you're talking about massive amounts of money, potentially between banks, so XRP is massive, has a massive use case, and the most bullish situation on so this is an uptrend that we're looking at, in high, higher high, higher high, low, higher high, low, higher low, higher low. But essentially and this is the Ethereum chart on 4 hour. And this is a double bottom essentially that I drew out. But so essentially with XRP, you have this massive use case for it. And then so people learn about that and they say, oh my gosh, I love XRP. Like it sounds like such a good token. It sounds like the use case is really good, because they're not necessarily using it as a currency. They're using it as a use case token, a vehicle to transport massive amounts of liquidity or capital from one place to another, whether a cross-border payment system essentially. Here's why people then say it's a scam, because they learn that and then they get into crypto a little bit more and then they say it's a scam because the co-founder of XRP, Ripple, created some company which you might be familiar with, which is in competition to Ripple and also highly correlated with XRP or Ripple, called Stellar Lumens. And Stellar Lumens, the CEO of that, which was the co-founder of Ripple, he's been dumping his XRP tokens onto the network, essentially suppressing the price. So there's a massive amount of XRP tokens, and most of them belong to Ripple Labs and are held by the Ripple team, and they have been dumping those tokens. And so essentially, when XRP buyers buy XRP, they're essentially they're essentially buying it, and then the founders are essentially dumping on them. So they say, oh well, it's a scam, but they can only dump so much of those tokens, and the use case is very strong. When you look at all the different cryptocurrency, XRP has one of the best use cases, um, like just in period on. But Stellar Lumens is trying to do something very similar. So I see, and I've talked about on before this channel, that Stellar Lumens is essentially the conservative version of XRP, but XRP is like the OG, which still has, regardless of the dumping, and this is what a lot of very experienced people in the cryptocurrency space talk about, regardless of the dumping that's going on with the founders dumping it, you can't change the XRP token. So regardless of what happens with the SEC, and the price is most likely going to continue to drop, and the price will drop more if the SEC says that it is a security, and they do charge Ripple, and they had this problem with EOS, but Ripple is really going out there and saying that they think that they're not willing to settle with the SEC. They're trying to fight them, and this could be catastrophic in the short term for the price if they end up losing. But at the end of the day, it's a cryptocurrency built on blockchain technology, and the use case is still there. And even if they get registered as security, even if, there's still the potential for that use case. It's still the potential to, even if the price just absolutely tanks after that, there is the potential. So I don't hold it right now, or I hold a small amount of it. I hold, of my portfolio, I used to hold a relatively decent amount of XRP, and there's a 74% pump. There's something called the XRP army, and they're very strong. So even they're very OP, overpowered. Think of it kind of like, and it's not really fair to call them the Wall Street bet kind of guys, but because they believe strongly in it. But um, because of there was that massive XRP army backing the coin, and the fundamentals of the prices being massively suppressed by the people that created it, and once they run out of currency, like once they run out of their tokens, the price isn't going to be able to be suppressed anymore, and it's going to massively pump. But my opinion on XRP, not financial advice. I'm not a financial advisor. I'm just very involved in the crypto space. Is that no matter what happens to XRP, it is going to always have that use case. No matter what happens legally with it, no matter what happens, you can literally just store it on your Ledger hardware wallet and save it for a rainy day. Now, that being said, it is a massively risky investment. It is a massively risky investment, especially to hold right now. Um, because regardless of what happens, if the SEC follows suit and basically finds Ripple guilty, then that news, regardless of the validity behind Ripple Labs' involvement with XRP, is going to tank the price of XRP. Let me know if you have any questions. I hope I covered it all. I'm really tired. For the US anyways, people were talking about pumping it next. Not Yeah, I have a guy on my Snap that was like, I'm involved with a lot of different people, and they were saying they were trying to pump it on, what was it, Monday they're trying to pump it? I have what is it? I have the stuff for that. I'm like debriefed on everything because I'm very involved in the finance market, and so everybody like shares all the different information with me. Like, I have a lot of guys that like talk to me about stocks. They're like, you gotta get the new EV stocks. Like you gotta buy stuff like Tesla because the new administration is gonna really be pumping that and just like all sorts of those. Let me see. I have his thing. It says February 1st, 2021 at 8 o'clock, at 8:30 Eastern, buy and hold world time zone to pump XRP. And this guy says, I'm dropping money on it. Here, I'll show you the post. I have to turn down the brightness so that it'll show on the camera. Yeah, so I am familiar with the XRP pump, but that is, they're trying to break a resistance zone on that, and that is, market money manipulation. So that doesn't necessarily have entirety to do with the actual intrinsic whatnot. If Elon Musk makes crypto, that if Elon Musk make crypto, that will be crazy. What I don't know. They say they might pump that see, and you don't want to have that indecision because then if people are shorting it, then it's going to be harder to hold the line to because it's easier to get on and Coinbase. Yeah, that's the thing. People were talking about you'd have to go to like KuCoin, and yeah, I mean, I got debriefed on the whole thing, and it seems to be the sentiment, according to a lot of the financial circles that I'm in, that they still want to pump XRP, and they're trying to get people on. I forget what it was called, but like KuCoin has it, a few other ones. But yeah, that's the thing. If the SEC does rule that it's a security, that could cause a lot of problems. And if more exchanges do tend to take XRP off, then you essentially have something like when the gold, when the United States banned gold around the 60s, and essentially they made it illegal for United States citizens to hold gold. But then, as you know, people can now buy gold again, and that was around the President Nixon's time. And so, it could be something like that where they force everybody to essentially give up their XRP for pennies on the dollar. And then essentially, years later, they bring it back with the use case, make it legal and whatnot. Exchanges start using it because like the use case comes in or whatnot, and people end up, it goes back on exchange. The idea that I'm saying is basically like it could be relatively next to useless. So I have a very small position in XRP. I do have a relative amount of money in L, what is it, Stellar Lumens, but a relatively high amount. So this is like my portfolio. I have I don't want to say the exact amounts, but so I have like about 30% Bitcoin. I have about 40 to 60%, something like that, in, oh, this is not even going to be right. This isn't going to add up to 100%, but I have like 40 or 60% in Ethereum, let's say 40%. And then I have, unfortunately, only 30% in Cardano. I'm looking for spots to accumulate Cardano, and I'm more so interested in Cardano long term. They're launching their mainnet, and so you might say to yourself, okay, well you know that Cardano is better than Ethereum. Why do you hold more Ethereum? And exactly, like I said, the market is very bullish on Ethereum, and it's the paradox. Just like Bitcoin is a 2009 generation one cryptocurrency, and everybody's absolutely obsessed with it. When there's Cardano, which has, the potential to be more than just a store of value, but the blockchain of the internet, essentially creating, most of, if not all of the major projects in the future for any use case in blockchain technology whatsoever. So obviously the implications for it are massive, but I think that the market is going to respond more positively to Ethereum in the short term. We're going to see something like 100% ROI, and then I'm planning on taking my Ethereum, 50% of my Ethereum, which is about 40% of my portfolio, putting it into Cardano for the long term. And then I do stake my Cardano on ADA Light IO, which is Charles Hawkins and his he developed that and coincide and like made it applicable to Ledger. So I hold my Cardano on a Ledger. My public keys are uploaded and staked onto ADA Lite IO wallet, and I earn like staking rewards, and I'm planning on holding that for the long term. I don't think I'm going to be selling my Cardano this bull run. If Elon Musk make crypto, that would be crazy. If Elon Musk made crypto, that would be crazy. Or if he like buys crypto, that would be crazy. Um, yeah, I say a lot that cryptocurrency, blockchain technology, and the fundamentals behind Bitcoin are so, you have to understand so many different things. You have to understand technology, economics, currency, and like the problems that we've had over the centuries with currency. Like, like everybody knows that the Romans used to inflate their currency by putting cheap metals and debasing the currency, causing inflation. Um, and watering down the currency supply, things like that, goldsmiths, loaning out the gold that they had, charging interest on it, watering it down. Same things with the Knights Templar, they did the exact same thing. So we've had a massive amount of money laundering and, market manipulation and things like that. And so Bitcoin's a really good solution to that. And for somebody to understand that, they really have to have a good understanding of currency, economics, um, like central bank application. Like this is essentially, it's not putting us back on a gold standard, but it's that sort of, anti-inflationary, holding its value, store of value type of gold, like what gold wishes it could be. Gold was a relatively good investment if it wasn't manipulated. And then a lot of the ancient cultures, like the Greeks and the Romans and like every ancient culture, if you look into it, they're all obsessed with gold in their religion, and that just isn't the case anymore. Like when you hear about in the Bible, the ancient Jewish people, they would worship like a golden cow, things like that. Like it's in every single ancient religion. You look at Greek mythology, what's Poseidon's trident made out of? It's a golden trident, and that isn't in the culture today. So there's a lot less interest in gold per se than there was back when it was a currency, and back when people don't realize that before gold was a currency, it was just valuable. People valued it. The Mesopotamians actually, and gold, Bitcoin is digital gold 2.0 essentially. So this is the only reason I'm talking about gold. And you'd have to be like, to understand these concepts, you'd have to be very, very, very advanced. The Mesopotamians favored gold. Mesopotamians were the first culture to document history with cuneiform, and they highly favored gold over other metals that were more useful, like iron, but they were obsessed with silver and gold. So it's just crazy to think that, understanding like the trend that gold isn't where, it used to be, things like that. So I think that the technocrats definitely, either the technocrats or China, because China's kind of not getting a very good deal with the Bretton Woods Agreement, created Bitcoin under the name Satoshi Nakamoto, and basically the big thing for that is that the ADA Lite thing. Can you go over that, and how do I stake mine? Yeah, so Cardano, staking on Cardano. So what I do, I can really only speak to me personally, just because like, like I stake my Cardano on there and I use my ledger. So what I do is I go to adalite.com, or not adalite.com. You want to make sure that you're on the right website, because if you're on the wrong website, you can get scammed and you can give your Cardano over to an unauthorized personnel, which is obviously not going to get it back. And if you're talking about 2017, 2018, if you're around back then once you lose your crypto, it's gone. And there's a lot of scammers in this space. So you want to make sure you're on the right website. You want to make sure you're on ADA Lite, LITE And to make sure 100% that I'm on the right website, I'll type in Cardano and then Ledger, and then I'll go on Ledger's official website and I'll click on Ledger's link from Ledger's website, the link on Cardano's page that they have for it. I'll click on that website that they have. So I'll type in on Google, I'll type in Ledger Cardano, and then it'll pull up Ledger Cardano's, like it'll pull up the website for uh, Cardano on Ledger, and you click on that link. It's The website is Ledger, and then you scroll down and you'll find the link. I click on that link to make sure I'm not going to, some scammy website. And then essentially you create your wallet on there. Once you create your wallet on there, the really nice thing about Cardano, and I was talking a lot about Polkadot, and I said I was massively bullish on Polkadot. The other week it was like overextended, and the pump was just massive. And I was talking about that, and we actually called the top and the bottom for Polkadot, which was huge. Everybody was like, buy Polkadot, buy. I'm like, it's overextended. It pulls back. We called the bottom. I say, like, if you guys want to get some Polkadot, right now is a decent time. It pumps up as I say that. We call the top, we call the bottom. But it's really hard to stake Polkadot, is what I've seen. But so you're looking at Cardano. You set up your wallet, and then it just automatically stakes it. You just set up a delegation pool, and most of the time the delegation pool that you set up, it's already set up. Like, you can change delegation pools, and you'll see it on you. There's a button where you just press staking, and when you stake it'll pull up like the staking, and it'll say delegated stake. It'll say delegated stake on the website, and it'll say the cash amount, and usually it will literally just always automatically stake your Cardano, and I think you earn around 5 to 14%. I think in the beginning it was closer to 14. I think it's closer to 5% ROI on it currently. But if you don't know what you're doing, definitely don't do it. That 5% is not worth losing your Cardano. Cardano is an absolute gold mine. And I think, over this run, if we continue this bull run, Cardano could easily 25x. Say 3% fee? Yeah, exactly. It does say 3% fee on there. So I feel safe on Coinbase. Yeah, so Coinbase is relatively safe. It's probably the safest exchange. I use a ledger, and you can get a really cheap ledger. I have two ledgers because, like, I do like a lot of different stuff with crypto. Like, I like move money around, and like just I need two ledgers. But you can definitely absolutely get away with having one ledger. And if you have one ledger, like, you can get a Ledger Nano S for like $70. I mean, but you said you're investing 500. If you're investing like more than like 5,000, maybe getting a ledger would be a good idea. But what is it? If you have to go on exchange, Coinbase, yeah, keeping your money on Coinbase isn't bad, because not necessarily I think that their security is top notch. It's relatively decent, especially compared to their competition. I would rather do Coinbase over something like Binance US or something like that. But the main thing that I like about Coinbase is exchange, and I actually hold a few $1,000s on Coinbase, is because they back it up. They will back up your um they will back up if they get hacked. They'll back it up. They're insured. They'll insure you, which is very nice. Says 3%. ADA was not or Hawkins. This project was created by passion. We appreciate any feedback, donations, or to the code base. Says 3% faith. Okay, so it's a third party. Yeah, I mean, I would, you could run your own staking node, but then you have to have um, if you run your own staking node, you have to have a connection to the internet like 24/7. It's not easy to run your own staking node. I would just take the 3% fee, honestly. That's just me. Um, I guess that's the one that Coinbase recommends. I guess I didn't really look into it, but I thought that it was ran by our boy Charles. Are running their own reliable staking pool with a very low 3%. I think it's 3% on ADA Lite. By delegating your own stake, you are supporting the development. Oh, I have about 1,000, and I'm looking to invest around 600 more right now, and in a couple of weeks, 100 every couple months, couple hundred every couple months. Okay. Yeah, I mean, everybody in crypto is going to tell you to cost-based average. I would rather go off of cost-based averaging based off the TA. And, if you're looking at altcoins, like if you specifically want to get involved with things like Cardano, like I said, I'm involved with ADA or with Ethereum. I'm really putting my money where my mouth is. I have a vast majority of my portfolio in Ethereum. But if you just want to go straight to ADA, you would be looking at this right here, which is Bitcoin dominance. And I'll show you an even better resource that like nobody in the crypto space really uses. So right now, Bitcoin dominance is basically how dominant is Bitcoin as a cryptocurrency in the space. So it's a percentage. So right now, it's saying that Bitcoin is 64% dominant in the space, which means 64% of the money is in crypto and Bitcoin, and then the other remaining, that would be 26%. The other 26% is in altcoins, or 36%. The other 36% is in altcoins. And so, that's big for basically as the Bitcoin dominance goes down, essentially it's good for altcoins. But I don't know if you've been here since 2017 and but it usually goes Bitcoin is where the money goes, then the large caps, and Cardano is definitely considered a large cap, and then it goes mid caps and then small caps if altcoin season continues. And right now we're on mid caps, so Cardano's a relatively decent investment. The best time that I would consider to get into Cardano is what I'm hoping. What I'm hoping is that when Bitcoin pumps like massively and Bitcoin dominance just gets absolutely destroyed, and we're back up to like an 80-90% Bitcoin dominance, all the altcoins should get wrecked. And when that's the case, buying something like Cardano seems to be like massively, uh, relatively good. Hopefully. But then this is the other tool I can show you. So you have ADA.D. So this is Cardano dominance, and this is massive too, because if you're looking at Cardano and you're like, or if you're looking at Bitcoin dominance, that's one thing, but this literally shows how much of the market is delegating money into Cardano. So if you're like, oh, well, right now we're on the mid caps, and if we move to the small caps, and you're like, well, is there any money still going into the larger caps? You can look specifically at Cardano and see how much money, percentage-wise, it's going into Cardano. And right now it's trending downwards. So there's a little bit of interest being lost in Cardano, specifically right now. How do you feel about LTC? Is that Loper? I just bought. Oh, is that Litecoin? Don't tell me that. Yeah, it's on PayPal. Is that Litecoin? So, like, as you can probably tell, I'm very, experienced in, like, not only, I've done all the financial markets, and I'm experienced in gold and silver, and, there's really no need for, let me explain, because there's a lot to it. There's a lot to the answer of Litecoin. So, First, to understand Litecoin, you need to understand Bitcoin, which Bitcoin's digital gold, and how is gold created and why is gold even valuable to begin with? Well, so when gold is created by a supernova, you can look it up on Google. Gold is created by a supernova, and so there's only a very small amount of gold on the planet. They say 3 Olympic swimming pools can fill the entire planet's worth of gold. 3 Olympic swimming pools can fill the entire supply of gold on the world. I know, it all sounds crazy. Look it up. They are facts. And because of these facts, gold is a finite commodity. And so it's good with inflation. Now, silver, on the other hand, and they say gold is like Bitcoin, and they say Litecoin is like silver. Silver, on the other hand, is a much more common resource, but still has intrinsic value. And so a lot of people, still use that, intrinsic value type, as a hedge against like monetary. But there's no reason, like we have a real reason why we use gold as in a hedge against inflation. We have a real reason why we use silver. Like if you talk to anybody that's in silver, they say there's use cases for silver. And there's also a massive culture behind silver. There's a massive amount of, if you study very advanced, but if you study sacred geometry, which is an extremely ancient practice of mathematics, silver has a electron configuration of 108, which is the exact degree of a square. And it has a very, like, silver has been in, like, it has that ancient history and value to it. But you don't need a silver. You don't need, like, we needed gold and we needed silver because those were actual resources. But once you have Bitcoin as the hedge against inflation, you don't need something else because it's programmable code. It's not like naturally occurring like silver and gold. If that makes sense. I'm very tired, but essentially, if it's like, saying that like decentralized oracles like Chainlink is like oil because information is the new oil and it's like an oil pipeline, that makes sense. But like the silver argument just doesn't make sense. And then if you read this marketing book, I forget what it's called. It's literally the best marketing book. I used to start up a bunch of companies and I was like really good at marketing. And if you read this marketing book, it basically says in this it's literally like one of the best books of all times. Literally, one of the best books of all time. This is the only reason I'm bringing it up. In this book, it says, what's the biggest mountain on the planet? It's Mount Everest. What's the second? Nobody knows. What's the biggest company for phones? Apple. What's the second biggest? Well, it's Samsung. But the point is that the biggest companies always take the most market share, and that's one of the most fundamental things that you have to understand about marketing. And Bitcoin is marketing. Whenever you ask somebody about cryptocurrency, what do they know? They only know Bitcoin. So Bitcoin's always going to take up more of a market share than Litecoin. Litecoin's never going to surpass it. Litecoin's never really going to be anything less than, Bitcoin's always going to be where everybody's putting the most money into. Now, on top of that, the only thing I can say positively about Litecoin is it does have a good track record. It does tend to perform relatively well comparative to Bitcoin, but I think once people wake up, um, it's not a coin that really has any intrinsic value, any use case. We already have Bitcoin as a store of value, and so we don't really need a number two. There's a lot of coins in the cryptocurrency space trying to be Bitcoin, and it's just not it. It's just not going to work. It doesn't really have a use case. And like Zcash, like all these different things. I get Zcash as a privacy coin, but you have Bitcoin Cash. Like, I mean, what's the difference between Bitcoin Cash and Litecoin? Well, Litecoin has a higher supply. Bitcoin Cash has higher transaction speeds. They're both spin-offs, and the community tends not to favor them. But essentially, um, with Litecoin, like so here's the thing about Litecoin, like if you're really involved in the market, usually Bitcoin, let's say, makes a 5% gain, usually following that, usually Litecoin will make something like a relative like 3 to 4, percent gain or something like that. So it does have gains relative to Bitcoin, so you can make that 5% gain on Bitcoin, then you can, put your money into Litecoin and it'll make that 3 to 4% gain, and then you can put your money into a larger cap like something like Cardano, because it seems to be that Litecoin always pumps before the large caps. So you'll have large caps like Chainlink, Polkadot, Cardano, and but when Bitcoin pumps, right after Bitcoin pumps, usually Litecoin will pump, and then the large caps will pump, which is just something interesting. But I wouldn't recommend Litecoin as it doesn't have a very strong use case, although it does have a good track record. I just don't see Bitcoin's the bread and the butter. Like, yes, Litecoin has a less market cap, but it also has a higher supply. So, I mean, it is massive for Litecoin that they got on PayPal, but that's kind of like the biggest news for Litecoin. So that was like the initial that was like the initial pump of it. Like if something like Cardano gets on chain, if Cardano gets on like Coinbase, or like if they get on, that would be massive. But I hope that, like, I'm so tired, but I hope that's like a good explanation for Litecoin, because that's, like when you look at like silver, like it has a lot of use cases, and like whenever you like read about mythology and stuff, it's always silver's all over mythology. You look at like what kills a werewolf, you have silver bullets, things like this. Like it's all over mythology. It is very important to the ancient cultures, this idea of silver. Like it was very, you have like silver spoons, silver whatever, but just you, we already have like the programmable code for a finite asset. We don't need two of them. Like the use case is just not very strong. Like XRP, that has a use case. I would say the XRP use case is significantly stronger. It would be like a hedge against Bitcoin to diversify your portfolio. And who started diversifying portfolios? It was Warren Buffett. Warren Buffett was the person that really started to perpetuate the idea of diversifying. And what people really don't get about that is what he was doing was he was diversifying not on, and this is really important to the Litecoin argument, he was not diversifying as in just getting a bunch of different stocks and then using that to say, oh, well, if this stock does whatever, like if I have a bunch of stocks, then that decreases my risk. No, that's not what he was doing. He was diversifying in different market sectors. So, like, for example, like if you were going to so you would diversify as in you have one cryptocurrency that's a hedge against inflation. That's Bitcoin. That's the finite asset. So then holding Litecoin, you're not diversifying into what Warren Buffett was talking about, which is diversifying into different sectors. You would just hold Bitcoin as a hedge against inflation. And then if you're like, okay, well that's going to be performing really good, but I want to get into other market sectors, like maybe something like DeFi, so that if DeFi's market does good, I take advantage of that. So you would get into something like Aave, and so now you are diversified, but you're diversified in different sectors. And then let's say you wanted to get into something like decentralized application platforms. So you have Cardano and you have Ethereum, and let's say you pick Ethereum. So now you're diversified with your anti-inflationary sector. You're diversified with your um, decentralized financial sector, and you're diversified with your decentralized application sector. And so you're very diversified in your portfolio. I really only see Litecoin as a diversification, but I don't think that people really understand the history behind diversification, what that really means. getting exposure to. Like at the end of the day, if the best sector, if Bitcoin is definitely the best anti-inflationary, then why would you diversify into? Because you're essentially just giving up gains. Like year over year, Bitcoin is going to destroy Litecoin. Like over the next 10 years, I mean, risk to reward ratio, everything. So why put some of your money into Litecoin? You know what I'm saying? Unless you can get a quick buck, but even then. Yeah, it is. Thank you. I gotta take off. It's 3. Yeah, it's 3 here too. Yeah, so I live stream a lot. I live stream a lot. So I live stream in the morning, sometimes the afternoon and the night. So, but like if it's 3 o'clock there, it's 3 o'clock here. I live stream in the morning, the afternoon, and the night. So I think yesterday I live streamed for like 6 hours. So I live stream a lot. So you'll see me on if you're sub. So I'll basically just go over the price action. We'll go over all these charts, and yeah, you're in the right place if you like Cardano, because we do definitely go over Cardano. We go over Ethereum. We go over everything, whatever is like the best opportunity in the crypto space. And then I also talk about Bitcoin dominance. So yeah, it was nice talking to you. Enjoy your night. You got Dogecoin, or you have a Doge candle right here. Just massive consolidation on Bitcoin. But yeah, anytime, ask me questions when Bitcoin's consolidating, because there's just not a lot to go over. I'm probably going to call it for the night also, end the stream. I'll be on again tomorrow, probably 2 or 3 times. Recently I've been doing 2 times, so I'll probably be on tomorrow relatively in the morning, and then I'll be on probably like around 6 or 7 at night probably. So let's look at it. Now, well, I guess all my trades are closed, yeah. It's 11:11 in the morning. You too, man. Thanks for all the info. Absolutely. There's a lot of people that, talk about crypto, but they're not like really involved in the markets and stuff. Like here, you're going to get the facts. You're going to get all the information. And I've been involved with a lot of markets, as you can probably tell. So you're going to get a lot of like perspective on different things, like just as like the full perspective, not just like somebody that's in crypto. Crypto is just the best performing asset, so that's why I'm in it. Alrighty. Have a great night, guys.